Doing a bit of live analysis on Bitcoin here, an interesting move in the context of the greater structure that's being formed. So the idea is we are essentially compressed enough on a data set basis to support a downtrend, although the more it compresses, like the more you hold a beach ball under the water, the more violent the bounce of the beach ball and the more violent the expansion of the data set. So this black line, thicker black line, is an indication of the expansion and compression of this green data set. And you see that and there's no real statistical rule other than under the zero point 0.7 rule for how much a data set has to compress before it starts to expand again. So this could be compressed enough and begin to expand. Um, that's why the breakout trades uh, are a nice trade to take if you don't get the second chance to bite at the retest of the mean. The breakout trades with the data set expanding, catching it falling, like the train tracks as explained in previous video, on the shorter term data set. So it's about the interplay of data sets, the interplay of the data between different data sets, and it can even be uh, kind of shown and quantified even without price at all, which I sometimes do to kind of get an unbiased view of where the data is. So you can see here that when the shorter term data sets started to compress and move within the longer term data sets, that was when we got this period of consolidation. And likewise, when the data sets kind of uh, converge on the mean of the longer term one, so the orange and blue converge on the green, and then when they start to move outside again, that is sort of indicating uh, periods of trending. So that is to say that we are compressed enough to begin a downtrend, if indeed that is what we are getting, but also that further compression um, could be warranted, and that would take us into the mean um, on that retest of either it could in theory just retest the capitulation. We go down to the hourly time frame, we'll see the last point at which volume was brought in by the market maker is this area here, which would be kind of considered the capitulation, which was retested here before the continued trend down. Um, this could easily be a stop hunt to go and retest this area. So the idea is I'm looking for it at least. I mean, obviously, it could begin a downtrend now, which is the point, and you have different systems that show when different conditions are met in the market. So right now we're not trending down with respect to um, this data set. I'm happy to play this theory still um, because I think that the risk reward trade by waiting here is better than entering here, assuming it's going to break out. So I would rather wait for confirmation of the breakout, and while that hasn't yet happened, still have my primary thesis in play because of the way in which similar structures have played out in the past, both here and indeed in the early part of 2019 in reverse when they moved the price up using the same algorithm in a similar fashion. And each time when it broke out and began to trend, just like when I showed previously when I removed the price data from the chart, the same rules apply that data sets can compressing inside longer term data sets, converging on the mean of the longer term. Same here, converging on the mean. And when you got these expansive periods of the data set once again moving outside of one another, that was when uh, price was trending, and kind of like an avalanche of snow, you sort of just get involved here. So that's one breakout strategy that is an option if price proves itself and breaks out and then begins to expand. However, until then, my primary thesis is still the retest structure, which would mean that uh, the interpretation of this or the thesis for this move, which we're going to test with objective data, is that this is a stop hunt down to fill a position. And just like they do on all time frames when they're going to take price somewhere, they take price somewhere else to get liquidity to justify it. So we have examples here countless examples, even in the last month. Within this consolidation, their footprint is always there. So you have this high here, you have this high, so we have this high that was taken out to use this area as liquidity to justify a move down. We have this obvious stop loss area, which was taken out to use the liquidity to justify this move up. We have this stop punt of this high. The level that was created there was used for liquidity further down the line to justify this move down. And now we are sort of looking at this structure and seeing how it is forming to see that to try to understand what the market maker is trying to do with this price action. Naturally, we are looking at uh, the compressing, consolidating data set. With the base of it being so low and price being here, we're sort of in a no man's land from the perspective of what price is actually doing. And it's not really an optimum area to be taking trades, even though the bias is still that they're going to come up into this area. It's not a place for long until the lower time frame structure would confirm that that is what they're doing. And if we go down into the minute time frame, we can see that the dataset system is in operation on all time frames and can be used to quantify where price is. So if you take an image of this price action here and we go back up to the weekly time frame, you can see that it is the same rationale. We have price breaking out of the data set and using the data set as, in the case of a downtrend, resistance. If we go down to the minute time frame, we have the exact same thing in operation. We have price breaking the data set, meaning that a downward trend is in progress, using the data set as resistance in the same way, and that when price breaks within the data set, we enter periods of consolidation. Um, so it is about examining the microstructure to see kind of what this move means. Obviously, that's a hunt of all of those highs. They took all the short stop losses. Anyone who was short the market here with a stop loss above this zone got absolutely raided, stolen from. And then they have done the same with long stop losses and people who were trading the breakout of this level. So anyone who went long here literally bought the top off the market maker and then, with a stop loss under this low, got raided in one candle. So it's not clear what they're actually doing with price at the moment, but we still have our larger structures. Um, and obviously that's the 200 weekly moving average would not preclude another touch into that, but it could easily form, as we discussed in previous video, a lower high because it actually didn't take the mean out on the first test, which it hasn't done here either. So this area of liquidity that we know has been created because of all the moves that they've done in this range creates the liquidity areas that they know they can go back to, and that's why you can have a quantified measured range with linear draws in addition to data sets which are just updating automatically by virtue of how they're coded. Um, so right now, there's no real trade in the market other than to wait to see what price does. And if it breaks out and this data set starts to expand, and we get confirmation here, um, and we get the expansion of shorter term data sets outside longer terms, like we got in the previous move down, and as is the statistical observations that we're looking for per the system, we'll be looking for a short trade. But the primary thesis, as previously explained, is still for a return move into this area for continuation. So be looking out for retail sentiment, looking for shorts again, because that is when they like to um, buy off of those retail players and move the price up against them. So you need to watch for price imbalances and obvious points that they're going to go to for liquidity, and then the creation of a narrative that is counter to the market maker's true intentions at all times. Um, but that's where price is right now, very close to what I think is going to be the breakdown to a new low, but it's just about the final kind of mopping up of liquidity as it's known to see how that actually manifests itself. So the idea is we're basically here in the final stages of compression, in a move that you can evidence as having 3 pushes, or at least you can form the schematic that price is about to break down into its third push of 3. We are outside the daily data set, which short term that is, which did not happen here until the breakdown. We were contained by the mean, waiting for the retest. So that is a piece of evidence in the column of breakdown happens now, but there's no point jumping the gun. There's nothing to be gained by jumping the gun, and I'll explain what I mean by that. If you and this is just how I like to trade the markets and how I like to approach risk. It's if you want to go short here at this point, obviously the assumed target is somewhere, in the high, or sorry, in the low to mid teens. So your entry and your stop are thus, sorry, your entry and your target are thus. You have to, where do you put your stop to invalidate your idea? It has to be above this high. It has to be here, because you need to, your idea for downward continuation. Where is it invalidated? I mean, maybe at the take of this high, but that's not really a sound trading idea in my opinion. Whereas if we can go back in time and using our statistical rules, if you wait for the trend to begin, you can be getting in this area, and your stop doesn't have to be above the high anymore. It only has to be back within the data set, or some slight distance back within the data set, because the idea is price is now trending, and if it goes back in there, it's statistically not trending. So it's an objective invalidation of your idea, rather than I'm jumping the gun because I'm FOMOing that I want to get 20 to 1 instead of 10 to 1 on my trades. Um, but your true stop loss really reduces that to not that great of a risk reward, because it has to be so far away. It has to be so far away from your entry at these points. So you either have to have a thesis that it's going back to kind of retest this area, and that's where you get your liquidity with a stop kind of somewhere above here, as explained in previous videos, or you just need to wait for the trend to begin, and then with the stop back within the data set, because obviously if price goes there reasonably, like just a little bit above the data set, because obviously you can still get wick retests, because if price goes there, it's no longer statistically trending and your idea is invalid, and then you scratch the trade. And if they're going back within the data set after beginning a trend, it's either a fake out indicating that this could have been the bottom, um, which is something we need to be watching out for, and see what the volume is like on these moves, or indeed it was a fake out of their true intention to take out the liquidity here, because obviously if there's tons of liquidity here now because of what they were able to achieve in, let me put up the stop. So I put up the stop hunt draws from previous videos and from previous charts shared on Twitter, and you see that they've come back into this liquidity area. But because of what they're able to achieve here, there is a lot of liquidity for them to trap positions below here, which would indicate, or which would be met with a price being outside this data set. So it's sort of a meta game, because there's sort of 3 things that they could do. They can run price back up here, they can break down, retest, and trend, or they can break down, retest, come back within, and then we need to see what the volume was like on this move, um, as a way of kind of understanding what the intention was behind this move. All of those things can happen, and it's about having different schematics and different triggers on your algos or your indicators or your system, whatever that may be, that can have you taking actions when certain conditions are met. But right now, price is just retesting into this liquidity area, and it's what price does from here that will set up a structure that we can take a trade based off of. And from my perspective at the moment, you could say this is a retest of these highs. It's a retest, a high volume retest, relatively high volume compared to the previous bars, but as for the consolidation, it's not that high. And it's retesting from the underside these obvious long stop losses where they ran for liquidity in the past. What does that mean? Maybe it means they're going to begin a trend, but I don't want to jump the gun. So I'd rather them confirm that to me or confirm that basically anything can happen in this range and there's no place to put an obvious stop loss where it's not going to get hunted and tell you something. Your stop loss placement has to tell you something. It has to say my idea is wrong. It can't just be like I want to lose this amount of money in the trade. Here's where I want to enter. Therefore, here's where I'm going to put my stop loss. The key to profitable, consistent trading where you have an edge and you're executing on the edge is to have whatever the structure is on the chart determine your position size. So it's not like I want to lose 1,000 on a trade. I'm going to enter at 19,000 and I'm going to put my stop at 20,000 in a short. It's like those numbers are meaningless. Like your portfolio management is meaningless to the market maker. Whereas what you can do, and this is not a true example because I don't think this is an actual trade, but let's say you do want to enter here and this is the high you want to put your stop loss above with a very shaky reasoning being they've already stop hunted here. If they stop hunt again, the idea is invalidated. So you have your stop loss at 2094 and your entry is at current price, which is 19, let's say for ease of math, 19194. So you have a $900 stop loss. That's the structure in which you're dealing with. So if you want to lose $900 on the trade, your position size would be 1 Bitcoin. If you only want to lose $450 on the trade, your position size would be half a Bitcoin. You let the structure of the trade and the setup determine your position size, not letting your position size and your max bearable loss determine where you put your stop loss, because that's irrelevant to the structure of the chart. So price can really do anything within this range from my perspective. Therefore, I don't really have an invalidation of any short idea other than maybe taking a punt at that high on the assumption that it's already been a place of high liquidity, stop punt liquidity before for a move down. Maybe if they totally sweep this level and close below, you could take it a trade down, but I don't really want to trade that way. I'd rather them set up and I have a high probability entry with whatever the momentum is in terms of where the market makers are deploying their capital at any given point on the chart. And that's how I like to play the game. So from my perspective, this is still a no man's land, but we know where we stand. We know where we stand. We know what we're looking for, and it's just a matter of letting those structures play out and let the liquidity games continue to run. And we hop on when it's basically fairly straightforward in terms of what the market maker is trying to do, and we have defined and close by risk on a structural basis, which allows us to enter with big size. Because just like I said, the structure will determine the size of your trade, because the amount of money you want to lose will be basically divided into the distance to stop loss, and that will determine your position. If you can truly have a high probability entry with a close by stop, that is when you can deploy maximum size, because the previous calculations that I just explained let you do that. So this is OnBrink Capital. Watching the markets, interesting time. It's a possibility this was it. This was the one chance to get on at this part of the consolidation structure and that we're going to break down, but waiting for confirmation, waiting for data set expansion, true data set expansion, because you will, even though it looks like this just spills like a waterfall, if you go down in the time frames, they do give you opportunities to get in. If we use the replay function and bring it back to here, retest of both data sets as one was expanding outside the other, which was a high probability, low risk trade because your stop loss is here. Because if they get in here and close within here, the trade idea isn't validated. And then you could have ridden it all the way down to your assumed target on the basis of what you're looking at on the macro structure. And that's it. You use the macro to micro approach to get targets that are far away, but are evidenced using the same systems, and you're getting into those trades on lower time frames with tiny risk so that it balloons up the risk reward for you because you're using multiple time frames. If we go down even further, just to close out this video, the hourly time frame gave you serious opportunity to get in. Textbook, the same logic, data set, expanding outside one another. Obviously, on the lower time frame, you're going to have more revisits to the mean, but this was a perfect entry. If I can mark that with a vertical line, you had a retest of the long-term expanding data set on the hourly with the mean of the short-term data set on that time frame crossing over. That's one bit of confluence. On the 4-hour time frame, at the exact same point, you had this retest. So you had this of the shorter term data set on the 4-hour, which was expanding, but yet we're still not trending. Then you got this big candle bringing you outside the range, and this was your entry point with the 4-hour trend in operation and a stop loss in there. So that is what we're going to look for in one scenario in the current market, but we're not there yet. So primarily still looking for a retest back into this range. If price wants to trend, we will let it do that and then get on board using that those set of criteria uh, when that opportunity presents itself.